Chicago's luxury real estate market has grown exponentially in recent years. In fact, the number of million-dollar homes changing hands in the Chicagoland market has more than tripled since 2000 and more than doubled since the peak of the housing boom in 2006. But high-end housing is also facing headwinds in the form of increased taxes and economic volatility. I'm Peter Olesker with At Properties, and in our final 2019 installment of At the Market, we're taking a closer look at luxury real estate in Chicago. I'm here in Winnetka on the North Shore lakefront with At Properties co-founders Thad Wong and Mike Golden. Welcome back, guys.
Welcome back, Peter.
We're going to be focusing on this town as well as two distinct neighborhoods in the city, the Gold Coast and the newly minted West Loop. But Halloween is coming up, so I thought maybe we'd start by reading some scary headlines, and then I'm going to give you guys a quiz, okay?
Okay.
All right, so headline number one, this is from The Real Deal, July 25th. Chicago area luxury home market continues slide in Q2. From Crane Chicago Business on August 1st, upper end home sales take a steep dive. And from Crane's, just a couple of weeks ago, Winnetka Mansion sells for less than it did 26 years ago. So quiz time, ready? In Winnetka, through the first 9 months of 2018, last year, 128 homes sold for $1 million or more. How many homes have sold in Winnetka above $1 million through the first 3 quarters of this year, 2019?
88.
I'm not going to be quite so pessimistic. It's a little bit of a loaded question, but I'm going to go 112.
Close. It's 125. So 3 fewer homes sold in Winnetka this year.
lives in
See,
Winnetka.
I'm the optimist.
I live in Lincoln Park.
We're going to go to the city
I've been
now.
Fullerton in 2 years, so.
Heading into the city. In Chicago, 210 homes sold for $2 million or more in the first 9 months of 2018. How many 2 million plus home sales have we seen through 3 quarters this year?
107.
212.
226.
Oh, hey!
I'm off. Reading all this fear has gotten me spooked.
So someone since winter, you the pessimist and I'm the optimist.
All right, so you know, granted the Chicago area luxury market is down overall, but what's going on here? How do we reconcile some of these negative headlines with, some good news, if not, decent news, if not good news in some of these pockets of the market at least?
You can find houses that are depictive of fabulous sales and great returns, and you can find homes that are extreme losses and, tell a scary tale. But in general, I think that luxury is down a bit, primarily having to do with the federal tax changes, having to do with SALT capped at $10,000. That's affected a lot of homes over $1 million, over $1.5 million, and the uncertainty of our tax situation locally. People are unsure now of exactly what it's going to cost them to live in Chicago, and so people are probably being a little bit more conservative on what they're purchasing than exorbitant.
Mm-hmm. Mike?
And I also think it probably feels a little bit different because there's more product on the market. There are more homes for sale, so a smaller percentage of those higher end homes is selling probably year over year, and that makes people feel like the market's down, when in fact, when you spill off some of those numbers, it's really not so bad, and in fact, it's pretty good in some markets.
Yeah. Well, looking at the numbers, I think one thing that we've seen is 2019 is down compared to 2018, but 2018 was a banner year for luxury sales, by a wide margin. If you look at 2019 compared to 2017, we're not seeing these scary numbers. We're seeing that the luxury market is down maybe 5%, 4%. So, something you've said all along this year is that maybe taking a little bit of a breather isn't a bad thing. Do you still agree with that?
Yeah, I do. I think that 17 felt good, like we had this natural progression since the recovery in, call it 10. We didn't have any big bump locally. 18 was a big bump. It was, injected with some new construction sales and got everybody excited. And the problem is people have a short-term memory and they get used to that short-term excitement and they consider that normal again. It's not normal. And so going back to this year, though it's a little down, it's not terribly down considering all the turmoil out there and the concern and the conversation, the hype, the headlines. It's not as down as I would anticipate. I would anticipate with the tempo and the feel of the market and the conversation that it would be a lot worse than it actually is. In this case, reality is much better than hype.